So Aisha, the construct is very different, and let me just try and explain it, that what is the difference between the world and us. China is stimulating their economy. US interest rate cut, the second leg of interest rate cut has started. In India, the earnings are actually slowing down. So the construct of all the three markets which really matter to the world, India, China and US, the macro construct is very different. The problem is very local. The problem was that markets had run up way too ahead of themselves, assuming that earnings growth would be linear. And the reality is very different. Numbers from Bajaj Auto, commentary from Nestle, the indication from Reliance, what we've got in terms of a delivery from Kotak Mahindra Bank, the way mid-cap companies are indicating how cost pressures are coming back, auto companies are talking about slowdown. Earning downgrade, I think, is the real deal. So the construct of what the global market is versus where we are, I think that has changed, and that is leading to a mid-air turbulence. B, I would like to go back to that point again. Look at yesterday's FI data and yesterday's DI data. More than institutional selling or domestic DI selling, I think there is, let me use this word, the speculators have left the building. And that is evident. When you look at the construct of how ranked mid-cap stocks have corrected, how the trader patronized stocks have reversed, and the Humpty Dumpty PSU stocks have taken a big fall, it is reminiscent of excesses in the market which are getting clean. So we've discussed why, we've discussed what. Now let's discuss where. Where do we go from here? That's it.
Yeah,
if I establish the fact that we've all fallen down, we all know that we've fallen down.
Yeah, because now it's evident on social media where people are actually coming out and tweeting about the damage on the individual portfolios. After yesterday's fall, I guess it got pretty scary at one point in time.
I remember, I think from July onwards, we'd started using this point that this small cap Humpty Dumpty will have a great fall. It's only when the fall happens, the pain, I think, is very far reaching. So what is evident? The construct of world and India is different, and earnings are slowing down. What has happened is price damage. Where do we go from here, I think, is the most important point. And I don't think you'll recover in a hurry. The reason you may not recover in a hurry is because either prices have to become attractive or earnings have to come back. And I think earning recovery is still a distance away, and price correction is not that, forget the percentage term, I'm talking about valuation, is not that great that you really want to warrant a buy. I expect that it will be turbulent till November. And then you need to start picking your spots, because in this selling, everything is coming down, and that's the time you need to start picking your bargains. I'm bullish on two sectors. I'm using the word I because this is something I'm ready to stick my neck out, which is, I think banks will give you a sharpish comeback. B, you will see definitely in the short term a bounce coming in some of the oversold PSUs. From overbought, PSUs have become oversold, and I think his bounce is around the corner. You will have to just wait it out for next couple of days. Let things settle down. Things cannot fall like this. So next couple of days, you need to just get your shopping list ready. If you're a long-term investor, don't worry. If you are speculating in this market, please don't speculate. But if you're really looking at picking some bargains, maybe this week, closer to Diwali, get your Diwali shopping list ready.
Get your Diwali shopping list ready, because it does look like some of these stocks are likely to offer you that buying opportunity. And yes, the PSU names, especially defense and banks, have seen quite a bit of drubbing. So maybe a comeback might be on the cards, but that's not what Goldman Sachs believe, because they have actually downgraded the rating on India a bit. They've tactically lowered India from overweight to neutral. So that's a big headline that we're tracking at this point of time. They say that the economic growth is slowing down, and of course, with the kind of Q2 earnings that we have seen so far, they're also doubting the profitability growth going forward. They're saying that the growth of profits is also slowing down. The high valuation is something that everyone has been talking about, and that could limit the upside going forward. Large correction is something that they're not working with as a base case assumption, because the domestic flows are strong, but they're not ruling out the possibility of a mild correction, and the fact that upside is going to be limited from here on. That's the key point that they're trying to make. The market could see a bit of a time-wise correction as per them over the course of the next 3 to 6 months. They've revised the targets as well. They're talking about Nifty 12-month target being now 27,000 versus 27,500 that we had seen earlier. And overall, the targets have been cut, but they have downgraded a few sectors. Industrial, cement, chemicals, as well as financials are the ones that they've downgraded at the moment. And they're talking about themes that you need to focus on, which is quality, which is the alpha, which is earnings visibility, and that remains the key talking point. Nikunj, do you think this is first of many that we are likely to see the downgrades coming in on India, tactically reducing the weight?
Firstly, I hope it's not 12,000.
It is not 27, yeah.
No, first of many and a late realization. I sincerely feel that brokerages are again behind the curve because you are coming out with price target slashes when markets have already reacted. Lot of stocks, are reaching that point from where the downside now fundamentally starts getting limited. See, what did we see? We saw a rising tide phenomenon where market did not differentiate between men and the boys. Now it's a receding tide phenomenon where everything is on the butcher block. Markets are not differentiating between boys and the men. But that's the time you need to be a smart stock picker and say that not everything is great and not everything is bad. Now what is not great, I think, are pockets of industrial, pockets of consumer, pockets of technology and IT. What is looking great, I think, would be financials. What could look great, I think, would be a cyclical uptick, which definitely will come back in some of the manufacturing stroke EMS names. And I think there could be a recovery which is around the corner, at least in some of the energy, renewable and the power sector. So you have to pick your spots and say what Goldman Sachs is saying is obvious. More are coming, but this is something which markets have already started factoring in. So I'm not surprised, but I think markets have already reacted.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.